Many people think that to be successful in Forex, you have to spend hours in front of the charts. But if I tell you how many times a day you can make a profit with just a 1-minute strategy, would you believe me? In our strategy today, we will use 4 EMAs with different periods: EMA 9, EMA 15, EMA 25, and EMA 35. Each of these acts as a filter. EMA 9 and 15 indicate short-term trends and usually show rapid market changes, while EMA 25 and 35 indicate slightly longer-term trends and help us avoid false signals. When you put these EMAs on a chart, you will notice how they move together as a dynamic system. A professional trader is like an airplane pilot. He must trust his tools, but at the same time understand the overall market situation. EMA does exactly that for you, both high speed and a complete overview of the market. Part 3. How to use EMAs. Now that we know our tool, it's time to get down to the practical part. In the EMA scalping strategy, the crux of the matter is the concept of crossovers. Simply put, we are looking for the moment when the shorter EMAs cross the path of the longer EMAs. If the EMA 9 and EMA 15 cross the EMA 25 and EMA 35 from below, this is a strong buy signal. Conversely, if the shorter EMAs cross the longer EMAs from above, this is a sell signal. But what many people overlook is that the EMA crossover alone is not enough. We should always wait for confirmation from the candles. That is, wait until a full candle closes above the EMAs before entering a trade. This will significantly reduce our risk. It is also better to use a 1-minute or 5-minute time frame. The 1-minute time frame gives more signals, but also has higher risk. The 5-minute time frame gives fewer but more reliable signals. The choice between the two depends on your personality and risk management. Remember, the EMA is just an auxiliary tool. You should always consider the overall market conditions, trading volume, and even economic news. This is where the difference between an amateur trader and a professional trader becomes clear. To improve, you can even find the most important areas in the higher time frame, and then for better entries, you can use the 1-minute time frame, which will make the entries more optimized and give you accurate signals. Before we go to see a practical example together, please like the video if you like it and give me good energy to move on to the next point. Part 4. Example of entering a trade. Let's take a practical example to make the matter clearer. Suppose that on a 1-minute time frame, EMA 9 crosses EMA 25 from below and moves upwards. At the same time, EMA 15 follows the same trend. This is our first buy signal. Now we wait for the next candle to close above all EMAs. If this happens, we can enter a buy trade. In this case, we place the stop loss a little below EMA 35. Why? Because EMA 35 plays the role of a strong support. If the price breaks this level, it means that the probability of a trend change is high, and we should exit the trade. As for the take profit, a risk-reward ratio of 1:2 or 1:1.5 is usually suitable. That is, if you risk $10, you should target a profit of at least $15 to $20. This will make you profitable in the long run, even if half of your trades are losing. Another important point is that in scalping, you should not aim to capture the entire market movement. Your goal is to capture a small part of the price movement. Greed is your biggest enemy in scalping. Section 5. Money management. Money management is like the backbone of trading. Without it, even the best strategies are doomed to failure. In scalping, where the number of trades is high, the importance of money management doubles. The first principle of money management is to never risk more than 1 to 2% of your total capital on a single trade. This way, even if you lose several trades in a row, you still have enough capital to compensate. The second principle is to determine the trade size based on the account balance. Many beginners open large volumes without paying attention to this issue, and their account is halved with a big loss, while professionals always enter with precise volume calculations. The third principle is to stick to your stop loss. Moving or removing your stop loss is the biggest mistake you can make. Remember, the market always gives you an opportunity to trade, but if you lose your capital, you have no chance to continue. Part 6. Common scalper mistakes. Many people enter the world of scalping because they think it is a quick way to get rich. But the truth is that without discipline and management, scalping is one of the fastest ways to lose capital. Some common scalper mistakes. Entering without a plan. Many people enter a trade just because they see the price move quickly without having a specific strategy. Not having a stop loss. Some people think the market will turn around and do not set a stop loss. This causes small losses to turn into big losses. Overtrading. When they lose several trades in a row, they enter more trades to compensate for the excitement and lose more. Ignoring the news, scalpers should be most sensitive to economic news because it can completely reverse the trend in a few seconds. Section 8. Controlling emotions. Controlling emotions is one of the hardest but most important skills in scalping. You may have the best strategy in the world, but if you cannot control your emotions, you will be a loser. One of the biggest enemies of scalpers is fear and greed. Fear causes you to exit a trade prematurely and lose your profits. Greed also causes you to stay in a trade too long and lose. To combat these two emotions, you should set a loss limit and a profit limit for each trade in advance and stick to it. It is also recommended to have a daily loss limit. That is, if, for example, you lose 3 trades in a row, do not trade that day. One of the biggest enemies of scalpers is fear and greed. Fear causes you to exit a trade prematurely and lose your profits. Greed also causes you to stay in a trade too long and lose. To combat these two feelings, you should set a stop loss and a take profit limit for each trade in advance and stick to it. It is also recommended to have a daily loss limit. That is, if, for example, you lose 3 trades in a row, do not trade that day. If you follow these principles, scalping can be a profitable and enjoyable trading style for you. But if you enter without discipline and plan, this method can quickly destroy your capital. If you enjoyed this tutorial and want to learn more about trading strategies and professional market tips, be sure to follow the channel and do not miss the next videos. I will also be very happy to write your experiences and questions in the comments so that we can review them in future videos.